Okay, good morning, everyone. It is Monday, August 2nd, 2021, the first trading day for the new month here. So, we do have a brand new daily, weekly, and monthly candle to look at. Um, we're going to start do a pre-market analysis here on the S&P 500 futures market and jump to our ultra high time frames here. On our quarterly here, this candle will close at the end of August here. So we have one more month for this to officially close. So a lot of time for things to develop, but things still looking very strong with no signs of exhaustion here on the quarterly chart. On our monthly chart, we had an official candle close on Friday afternoon. And so this is the July monthly candle right here. Closed very strong. Again, no signs of exhaustion from a divergent perspective. Everything is looking very strong here on our ultra high time frames. When we get to our weekly, I think there might be an argument here for somewhat of a bearish divergence off of the previous weekly candle. If you wanted to be really precise here, and bring this down, we did actually go up by fractions of a percent in RVI, but it is so minute that I think you could still argue that you essentially do have a bearish divergence off of the all-time high that we made. Keep in mind that we do get those indications, bearish indications, in a bullish push, and sometimes they lead to a decent 100 or 200 point pullback. Sometimes it's just a very shallow pullback and they continue and then break through that previous high. So we do want to keep in mind that the 2250, the new all-time high we made last week, is going to be a line in the sand there that we're going to want to see break. But this new candle, we really can't say anything about. We've got 5 days of market action, and this picture could change, especially from the signal perspective and the candlestick perspective. So right now, maybe somewhat of a minor argument for a bearish indication off of the weekly. On our daily, we did get agreement off of that all-time high that we made up at 44.2250. And we did get a pullback on Friday. So somewhat expected off of Thursday's candle there for a bearish, because of the bearish indication off of Thursday's candle, somewhat of an expectation for a bearish day on Friday. And Friday ended up being somewhat of just another sideways day. If we just go ahead and look back here, Friday, Thursday, Wednesday, Tuesday, Monday, just a lot of sideways action here. And then arguably Friday as well, all within this range from, again, about 44.30 or 43.70 to about 44.10 here. And this morning we find ourselves back in the chop. So we could see that, bulls tried to push it, bulls pulled it back, tried to push it again, pulled it back, tried to push it again, pulled it back, and now we're trying to push again. And we do have that line in the sand up there at 2250, where we now do have a weekly and a daily bearish indication from up there. Now, when we got to 2250, we did pull back to about 43.70, so maybe we could argue there's about a 50 point pullback from that indication, and now there seems to be a counter indication here on the daily off of the low of Friday. So Friday's low, we got a nice bullish divergence on the daily here. But again, just keep in mind that we've been in this tight range for 5 or 6, maybe even 7 trading days now, and we're really going to have to break out from either side in order to really see a clear direction and where they're going to take things. But right now, I want to keep in mind that there were 2 bearish indications on these higher time frames, and then as we get down and get more resolution off the lows, we do see a bullish indication off of the previous daily low. Let's dial down to the lower end of the high time frames, and we also do see that nice bullish divergence when we came down to 70.75. Must have been overnight on Friday. So nice bullish indication there. And then I think you could argue that you have a fairly decent bearish indication off of the overnight high. So first thing I do want to point out actually is that the 4-hour agreed with the bearish indication off the all-time high. So we had the 4-hour, the daily, and the weekly all agree up there. And again, we got that 50-point pullback. And now we're getting that counter bullish indication off the previous daily low. So a confirmation there on the 4-hour of what our daily was telling us here. So the daily and the 4-hour both agreeing on the bullish case off the overnight low. So you can see that we're getting very kind of ambivalent and sideways indications here for, again, the last week, week and a half, arguably. And then we get to our 60-minute, and the 60-minute actually did not agree with that bearish indication off the all-time high, but it did give us a nice bullish divergence off the previous daily low. So we do have a lot of indications of bullishness from 70, and then a decent amount of bearishness from the all-time high, although the 60-minute was not agreeing up there. So you can see that we're basically looking to get out of this chop range that we've been talking about all last week, basically 43.70, 44.10. We really want to get out of this. So we'll see if this morning brings any type of movement in the market. Let's go down to our intermediate time frames here. Go to our 30-minute just to see if we get some confirmation. And sure enough, another nice bullish indication off the previous daily low. And we did not have agreement on that all-time high. So, overall, again, it's probably not really helping our case this morning. We basically need to get outside of this range. Let's just see if the 10-minute has similar indications. The 10-minute also had some decent bullish indications from the low from Friday, and then actually did have some bearish indications off the all-time high. If I just jump back, I want to look at kind of the most local price action that's happened here. Just go to the 4-hour. See, the 4-hour is showing a bearish indication off the overnight high. And arguably the 60-minute is as well. So we're starting to get kind of two levels here, the overnight high and the all-time high at 22.50. These two levels are going to be important for the bulls to get through here this morning. If they cannot get through the overnight high and the previous daily high, or the all-time high, then there could be some type of bearish follow-through to pull back and maybe test the lower end of the weekly range, or the previous weekly range. And then if we go down to, again, to our intermediate time frames and look in this local area, we did get a bearish indication from the overnight high, and we got it on the 10-minute as well. So that's what we're going to have to watch this morning. Keep in mind that if the market does pull back a little bit here, that we are pulling back right into the middle of the chop zone. And so maybe not the most intelligent area to be putting a lot of risk on this morning. Ideally want to see them kind of move out of this area, either break out to the upside or come back down to test some of the lower lows back here, maybe down into this 43.38 area, maybe deeper down into 43.25. We'll have to kind of take it level by level if they do start to sell off here. And then if they do break through and we start pushing higher, we want to keep in mind that we do have this pretty decent leg right here, the most immediate leg that we made, that would bring us up into the 44.33 area, right where that prediction point is. And then once we get above there, we do have a stacking of prediction points up here, so there could potentially be some trouble. And notice that the 61.8 extension of this most recent major leg here is at 44.50 even, so a nice even number up there. And then if we do just kind of bust through all of this resistance, there's a huge gap up here. Once we get up above 44.62, that would bring us into close to 4,500 if there's a strong enough push. So I'll leave that with everyone for the morning here. Just keep in mind the choppy potential conditions if we do continue to stay in this general area here.